because owning a home is a priority in someone's financial picture. Lee, I think you shared the other day that it was the average net worth of a homeowner is $300,000 and a renter's $8,000.
Right.
You know, it's incredible. And I think that the word's out on that. And I think people know that that's really the best way to increase someone's net worth is to own a home. And it's like, how much am I willing to put forth to do that as far as effort?
Welcome to another edition of Tuesday Tips with Brent and Lee. If this is the first time you've been to our channel. On this channel, we talk about real estate, mortgages, and money. My name is Lee Brickey, and I'm joined with my good friend Brent Starts from Untitled Lending. And if this is the first time you've been to our channel, I usually would tell you to slap that subscribe button and ring that notification bell, but too much slapping going on here lately on stages. So I think we all need to be a little nicer to each other. So how about just tap that subscribe button if you're interested in any of those things, real estate, mortgages, or money. And don't forget to ring that notification bell so you don't miss any of our real estate tips and tours, because we put up new videos every week, except for last week. I had sinus surgery and I'm feeling much better, but if I seem a little off today, it's because I am still healing and there was no way last week we were doing a video. With that said, also don't forget that I am a real estate agent here in South Florida, in Palm Beach County, the Treasure Coast. And Brent is a mortgage broker, and we have sold lots of real estate, millions of dollars of real estate. If you're looking to buy or sell anywhere in Palm Beach County or Martin or St. Lucie, give us a call. Right, Brent?
That's right. It's good to have you back, Lee, by the way.
All right. I'm glad to be back. So today we're going to talk about the market more than anything else. Since I've been down, the market's changed. It's a moving target here lately. It's changing on a weekly basis. So what we're going to do is go over today what's happening in the real estate market nationwide, what's happening with mortgage rates, how the stock market's affecting the bond and also rates, and where we think things are going to be heading here, what opportunities exist right now, because there's some opportunities. We're going to share that with you. Also, what's happening here in Florida, because our market here in Florida is much different than anyone else's in the United States, just because of all the people moving here. And we're going to talk a little bit about that. So we want to stay to the end. So let's get started talking about what's happening nationwide in the market. So as of this week, housing prices are still up, rates are still up, and home sales are still projected to continue to increase. So, you know, things are still moving very quickly and people are still buying homes. So with that happening, you're also seeing the new home sales increasing this last month also. So we're seeing more new home sales happening up right now, like 1%, I think, Brent, right?
That's right.
New home sales went up another 1%. So even with, you know, the rates going up, people are still buying houses. So what do you think the reason for that is, Brent? Why do you think people are still out there buying houses, man?
Well, you know, there's so many people in this area specifically. It's the migration pattern. I mean, 40% plus of what we're working on right now are folks coming from other states, not just, you know, and probably a large percentage are coming up from Miami, Broward counties, which are more expensive. So they're going to the more affordable counties, areas that are beautiful, not as crowded. The traffic's not as bad. So it's a very attractive area. The areas we specifically work in being, you know, primary St. Lucie County, Martin County, Palm Beach County. Those are still very attractive. And compared to the other markets that these individuals are coming from, you know, the Northeast, Eastern Seaboard, it's still a bargain. And then they come down here and they see what they, well, you know, how many times does someone come down? Oh, we're looking in 3 or 4 months. They come down here and they're in escrow in 3 days.
Right.
Happens all the time because they just see the value.
All the time.
Yeah. happened twice this week to you.
Twice this
So,
week, right? Well, let's get into that right now. So the market definitely changed over the last couple of weeks because we sold 2 homes this week, and we're seeing homes, especially in St. Lucie County, anything above $450,000 is sitting on the market for longer right now. And we sold, 2 $500,000 homes this last week, put them under contract, and no bidding wars.
mm-hmm.
So, that we haven't seen that for a while, right? I mean, both homes, we were able to get the offer accepted the day we put it in. So, I think this is a little opportunity right now for if you're a buyer and you're looking to buy, there's some opportunity for you to get into the market without having to fight so hard to get a house. Now, with that being said, we did do a $300,000 condo, and there were 5 offers on that one. So, we were a cash deal closing in 15 days. So we obviously won that bid, but, and we came in 20,000 over the asking price. But, once you get up into the 455, $600,000, $700,000 in St. Lucie County right now, you're seeing that there's way less bidding wars going on right now. Now, Palm Beach County isn't the same, but Martin County is a little bit, is showing a little bit of less bidding wars also. So, and this is something also I will tell you that I was on a call today with some real estate agents all over the United States, and we're seeing some softening in the market everywhere. So the market is changing. Now, that could just be we're rolling into summer, right? So people are holding off buying until kids get out of school, and then we could see what we saw, January, February. We were in the same position. There was inventory on the market. There was no bidding wars. It was easier to buy a house in St. Lucie County, especially. And then all of a sudden, into February, early March, everything got sucked off the market, and we were back to no inventory again. And, every single deal we were trying to do where we were with a buyer, we had bidding wars, and on our sellers, we had bidding wars. So I think right now might be a good time for, people to pull the trigger. And we saw that happen with one of our clients just recently. They came in, they found the house they liked. Hey, look, they pulled the trigger, and more importantly, they pulled the trigger and ended up with a home with $30,000 under appraisal. So haven't seen that happen in a long time either.
That was an awesome job on that, Lee.
So
great.
I don't necessarily know if I did that, or it just was one of those things. It just kind of worked out for them, but
place, the right time, possibly.
Right time and right place on that one. So, so where do you see the market going over the next couple of months here, Brent?
Yeah, interest rates have had an impact as well. There's several variables, right, that we need to watch. One of those is certainly interest rates. And this last week, and of course, the Fed raised the Fed funds rate, a 0.5 point, which was basically baked into the cake. We knew that was going to happen. And so we had a lot of questions to answer that day because they were raised a 0.5 point, and everyone wants to lock that day. Or before that happened, it was already assumed that was going to happen. So ironically, and this happens often actually, if something's expected and the risk is off the table of something worse, actually rates improve, which is what happened last Wednesday. Rates were actually raised. The Fed funds rate was increased a 0.5 point, and mortgage rates dropped right after the announcement. The case being that the 75 basis point increase was taken off the table. And so that possibility was removed in the comment section in the press conference afterwards. So that's basically why the market responds. So the bond mortgages response in real time to events that are occurring all week. This week being the CPI is coming out Wednesday. That's an inflation number that's going to come out. And so
that's going to make us want to put our heads through the wall right there for sure.
Right.
I mean, that's never good news.
No, never. And
we don't want to be a Debbie Downer. I don't know if we would, I mean, but,
no,
but I don't see that being any good news.
No, it's not going to be good news. But in any case in point, a lot of it's already expected. As you're expecting it, the market's expecting a downer as well. And so it's kind of baked in. And so typically inflationary news is bad for interest rates, right? They increase rates to get inflation under control. And so we have a unique situation. And the Fed really is kind of trying to stay measured, but hey, can they really do this and reduce the bonds that they're holding on the balance sheet right now? I mean, one of the things they had in the statement on Wednesday was they're going to sell $17.5 billion of mortgage-backed securities per month in June and July. Well, that creates demand. Currently, right now, they're purchasing mortgage-backed securities. In other words, they're providing liquidity to mortgages, which reduces interest rates.
Right.
So to flip from a buying, from a buyer to a seller, we'll see. I think that they're going to take a measured approach. And I think that's why they took the 75 basis hike in June off the table. And I think that the market's basically predicting a 50 basis point increase in June and July. So that's what's already baked in. So if it comes in less, then that'll be great news for mortgages.
Right. And there's still a lot of buyers out there right now. So an article just came out talking about, buyers out there. 20% of buyers surveyed said they will make an offer immediately if they find the house they want. But 56% of the buyers that are out in the market right now in a survey said that they're willing to take a second job to earn more money to buy a home. And I think that's because especially first-time buyers, millennials and out there looking to buy right now are saying, you know what, we're seeing this equity continuing to go up, so we need to get in the market. So they don't really care what rates are at this point. They just want to get in the market so that they can own a home, because rates will fluctuate up and down, correct?
Absolutely. Daily. They go up. Matter of fact, the stock market's getting clobbered today. And the last I looked, it was down 650 points. And that's the rates are a benefactor of that. As the stock market sells off, they could provides more liquidity to the mortgage market and lowers rates. So we're locking loans right now that are closing within the next 2 or 3 weeks.
Right. So, but prices are not coming down.
No, they're not.
And I think this is important, that sellers and buyers understand that there are no indicators anywhere in the market right now that we're going to see prices drop. So we're seeing sellers aren't listing their houses so high, because if they're listing high, they're having to reduce the price. And if you're living in the Florida market and you're a seller right now and you're sitting on the back burner saying, man, I'd really like to downsize, but I'm at, 3% on my loan, or, 3.5%. And if I downsize, I'm going to be at 5%, right? So does it make sense for me to put my house on the market? What would you say to that seller right now?
We just took a call from someone from New York City today, and they're in that same situation. Hey, we're at 3.25, I think she was at, and we're interested in selling our home here and moving to Florida. And so one of the options is certainly look at a 15-year fixed. They'd like to retire in 15 years anyway. The rate's about, full half point, if not more, lower on a shorter term like that. But the possibility of buying the rate down, we went through some options that way. And so, buying the rate down in the $450,000 range is where the loan is on this. I think she was paying $4,000 to $5,000 in points. It's an end-all home. to lower the interest rate by about 3 3/8 to a half. So, when you run the numbers on that, typically the break even's about 6 or 7 years. So for someone staying over 6 years in a home or in the loan, it makes sense to buy the rate down. We just took a call from someone from New York City today, and they're in that same situation. Hey, we're at 3.25, I think she was at, and we're interested in selling our home here and moving to Florida. And so one of the options is certainly look at a 15-year fixed. They'd like to retire in 15 years anyway. The rate's about, a full half point, if not more, lower on a shorter term like that. But the possibility of buying the rate down, we went through some options that way. And so, buying the rate down in the $450,000 range is where the loan is on this. I think she was paying $4,000 to $5,000 in points. It's an end all home to lower the interest rate by about 3 3/8 to a half. So, when you run the numbers on that, typically the break even's about 6 or 7 years. So for someone staying over 6 years in a home or in the loan, it makes sense to buy the rate down.
Going back to Florida, we just saw an article come out that says that Florida now is ranked the #1 state in the United States for retirement. So people are coming here right now.
Yeah.
It says the state came in #1 for retirement, #5 for quality of life, and #8 for affordability. So those are pretty good numbers. Those are pretty good reasons for people to continue to come here.
Absolutely.
And we're still in the top 10 list for migration right now.
Mm-hmm. Oh, more people are moving to Florida than any other state in the union. So it's an incredible situation. There's just too many people moving and not enough homes. That's, the bottom line, I think, on our market here. And I just don't see that changing anytime soon. I really don't.
Right.
When I lived in California, I may have shared this before, but I was there for 23 years and we've been here for 12. You're just, and we're just starting to see what we saw in Irvine, California, 35, 40 years ago, where people are taking those second jobs and they, because owning a home is a priority in someone's financial picture. Lee, I think you shared the other day that it was like the average net worth of a homeowner is $300,000 and a renter's $8,000.
Right.
It's incredible. And I think that the word's out on that. And I think people know that that's really the best way to increase someone's net worth is to own a home. And it's like, how much am I willing to put forth to do that as far as effort? And what we saw in California is rooms were rented out, second jobs, that type of thing. Dual incomes in the home, both mom and dad both working. I mean, you start to see more and more of that. And I think we'll see that, and it can run for quite a while, as I witnessed there. It's
right.
It's amazing.
Now, what would you say? Because we've had a few clients that were looking to buy second homes and have decided kind of to pull out and wait on doing that. What would you say to a buyer out there that has a home in another state, looking to eventually end up in Florida, buy a second home, have it, and then eventually retire here, who is, getting pounded in the stock market right now? What would you say to that person?
Well, I think just the supply and demand. I mean, as far as obviously the supply of homes is much greater and demand's much, the supply of homes is low and the demand is high here for homes. And right now people are kind of running out of the stock market, right?
Right.
I mean, I think, you can have a leveraged home here, basically buying a second home possibly. And I think you're buying, over the long haul. Let's say someone plans to come here in 7 or 8 years. I think you're going to be very pleased with where you're going to find yourself 8 years from now, as far as in a home. And I think that long-term interest rates will provide an opportunity. The market's going to provide an opportunity as recession kind of sets in, things slow down. They're going to, reverse the trend on rates. I mean, it's going to happen. So I think just looking at a long-term, really getting the big picture and keeping that in mind is what I would recommend.
On the second home, what are rates looking like right now for a second home?
Yeah, pretty much the same as a primary residence. When we call it an investment property, the rate pops up about a half point above market for an owner-occupied home. But the primary and secondary homes are still right in the 5.25 range, roughly today.
Okay.
it's slightly improved today with
Right.
great credit, that type of thing, 20% down.
And we've talked about this before, but it's worth bringing up again, that in every recession that we've ever had, because I think that's one of the things that buyers right now who are looking at buying a second home in Florida are worried about, or buying a home anywhere and second home anywhere worried about, is the recession coming, because obviously every analyst in the market believes we're heading for a recession. There's no way around it. We just waited. The Fed waited too long to raise rates, and the government just pumped money into the economy for too long. And this is what it is, and it's going to happen. So a lot of buyers are like, I'm afraid of a recession, but in every recessionary period in history, we've seen home sales actually increase because people are putting their money into real estate.
Right. And they're running out of the stock market and things like that. I agree with you, Lee. And again, I think real estate needs to be looked at as a long-term investment. It's not something like a stock where you get in and out. It's not productive. So I think that's the main thing to keep in mind.
Right. So let's kind of end things with this. We've been very, very successful getting offers accepted for buyers. And we do a couple of things that I think are different than a lot of, mortgage real estate teams do, that work together. You and I work very closely. And one of those things is what's called a DU approval. And people don't understand what a DU approval is, but I think it's something that, when you send that DU approval over with the offer, it carries a lot of weight. So explain to everyone what a DU approval is and why it carries so much weight over just an approval letter that you would normally write.
Yeah, a DU approval. DU stands for Desktop Underwriter. It's the name of the software program that Fannie Mae uses. So it's the standard. It's the standard that real estate agents understand when they receive that DU approval. They know that the income, the assets, credit, all that's been looked at, and it's been input in a computer, which takes a few hours, and then the actual algorithm's been run on that data, and the result is either an approval or rejection. There's several different classifications that it can come back with, but approve eligible means it's approved and eligible for Fannie Mae to purchase right now. So it's pending all those things being submitted to the lender, the underwriting. So they know that's as good as gold. So that's a great indicator that this loan is going to go through. It's going to be approved. Other thing we do, Lee, frankly, and this a couple times this week, I think I've done for your sellers agents have contacted me personally, and so we get the permission from the buyer, or in this instance, to share some specific information. You know what I mean? That would compel them to accept the offer. So we obviously get approval to do that type of thing, but a lot of times that's what takes it over the top as well.
And what is that, like credit score, things like that, correct?
Yeah, a lot of times if credit score, if it's really strong, I ask the borrower if that'd be okay to share, because hey, this is your strong suit. Let's share this, and sometimes the offer might be above ask. I mean, there's all sorts of different things. The money going hard, the deposit going hard sooner, as far as non-refundable at 20 days or whatever. So there's a lot of strategies I know you've used as well from the offer standpoint to make it stand out. And it's not always price. That's not always the number one thing the seller's looking for.
Oh, absolutely not. I mean, I say it to clients all the time. I have two rules. Is number one, if I can't get the agent on the phone and have a conversation with them, we're not putting an offer in. I mean,
Right.
It's just, I'm not getting into it. I mean,
Right.
if I can't find an agent that's willing to pick up the phone and talk to me, I don't care how busy they are, how big their team is, whatever the case may be. They're just, sitting around waiting on to hear if we, get an email, if we got an offer accepted. It's stupid. I mean, and there's so many agents that just just are doing that right now. And it's just laziness. And I just think it's just really hard on your clients. It makes this whole situation much harder. And the second thing I always tell clients, as soon as they get in the car with me is, look, we're going out to buy a house. I'm going to talk to you as a seller instead of a buyer, right?
Mm-hmm.
I'm going to tell you exactly what, if you were selling this house, this is what I would expect the buyer to do for you. And I put them in the seller's shoes, and that makes it a little more palatable to them to be able to understand, hey, 5-day inspection period, 20% down, something that we've been very successful with many buyers right now. If they have good credit, they're putting 20% down is getting a no appraisal contingency. I mean, that's a huge deal. We can close a loan in 30 days without an appraisal contingency, and they don't have to worry about paying for the appraisal. It just makes the deal go so much easier. So those are all things that we do to help, these buyers get their offer accepted. And that's important for sellers to know when they're selling their house and they're moving on to another home, that they want to be working with an agent and a lender that are doing the same things. Because we found with some of the new home builders, they don't even know what a no appraisal contingency means. So these are all things that can help buyers and sellers. If they have any questions, they can reach out to you directly, correct?
Absolutely.
All right. So your information and my information are in the information section below. Feel free to reach out with any questions or concerns. Also, if you're purchasing a new home, definitely reach out to Brent 100%. Even if you're not gonna use him, reach out to him, talk to him, because when we are seeing right now with new construction, if you're waiting 6, 8, 10, 12 months for your home to get built, you need to be working with a lender where you can lock that loan out, down the, 6, 8, 9 months down the road. So that, if rates do not, come down and they continue to go up, you could be in a situation where your debt to income is blown out and you can't buy that house, and these builders are not refunding money. So do you have anything else to close with, Brent?
No, I'm glad you brought up that point. We've got 2 or 3 that are closing in the next couple months. They're just so grateful. They're closing because that scenario did play out.
I just had a client had to throw $50,000 more down because they, waited till, 30 days out to with the builder, and the builder didn't accept some of the income. And, everything's changing on a daily basis with these lenders. So definitely reach out to us. Again, if this is the first time you've been to my site, please don't forget to slap that subscribe. But oh, wait a minute, we're not slapping it, right? We're just tapping it. So tap that subscribe button right there. And don't forget to ring that notification bell so you don't miss any of our real estate tips and tours. And then you can watch our next video on why to use a mortgage broker over a direct lender right there. Be kind to each other. Be kind to each other. And we'll see you next time.